Hi, everybody. Trendy John. I am back from Italy, and I hope you guys are doing amazing. As always, we're going to do the broad market analysis here on Sunday. We're going to cover all kinds of great stuff, so just bear with me. One thing that I would recommend to you is speed up the time on this YouTube video. And you could do that just by going to the settings. And I typically listen to people at 1.5 to 1.75, and that's just to get through things a lot quicker. Okay. Again, like I said, I'm back. I'm refreshed. I feel really good. Yeah, sure. The market's pulled back a little bit. That's great. It's pulled back quite a bit. Considering if you look at the last 5 weeks, we pulled back about 75 to 80% of that. I'll show you guys that on a chart here shortly. Some news. As always, if you guys are brand new, welcome to the room. Melissa did a great job while I was gone. I wouldn't expect any less. I hope you guys had a good time trading. A couple things that I want to bring up before I left. I talked a lot about the Trendy Iron Fly Bot, and you guys can see that right here. This is the Trendy Fly Bot. This will no longer be sent to the SPX room. So please note that I now have it connected to go into my what I call my Ashley account. That's my wife's name. So these trades will be going there, but I just want to let you know, starting off tomorrow, I already have the full max contracts here at the moment set up to trade. And the way that I have these, I want to talk about these because I talked a lot about it before I took off. And I want everybody to understand that this is a personal choice over here. So, for example, a lot of times the bot won while I was gone, and there were a couple times it didn't win. But that doesn't necessarily mean that it didn't win depending on where you had your trim set up. So, for example, I was looking for a much bigger return. And as you guys can see here, I have the capability of setting up where I want my trim. So, for example, here, $50 a contract. This happens pretty quickly and easily. And then I have $100, 150, 300, 500. I was sitting down here. So I really need the market to move in the direction that, my strategy is taking. So there were times, I think once or twice, that the bot did not work. And that was because I was way down here, but the bot did work. So what I mean by that is that it actually got up into these sections, but I just wasn't willing to take quick trades. So please know, when I come in here, I choose what I feel is best far as my risk to reward. And for example, like tomorrow, I have these set up and I'm not taking profits until I hit $100 a contract, and then I have some in here at 300. And I need to fill out the market kind of that tells me where I want to put these trims at, if you will. Okay, more to come about the bot, but again, this is about the broad market analysis. But I just want to make sure you guys understood that this is going to be not sent to the SPX room starting tomorrow. And actually, I believe I did that on Friday. All right, since I was back from Italy. Now, just like every Sunday, we're going to talk about we're going to start here by using this week's major U.S. economic reports and Fed speakers. Okay. The reason why I talk about this is because volatility, I love volatility, right? I love it. And I love trading volatility. I like when things like to move. Am I expecting volatility this week? You'll see on the charts, it's really a toss up. It feels very, very neutral. Okay. Before we get started, please just take a few seconds and hit the like button. It's really fast, really easy. Just boom, click it and make sure you're subscribed to the channel as well. Starting tomorrow on 4 August, we have factory orders. Now, that doesn't sound exciting, does it? I don't see volatility coming in from this, but we could get some sort of tweet bomb. Anything could come out about tariffs, that type of jazz. But far as money is concerned, it sounds like we're just coming off the heels of 2 days down. And I'll talk about the cycles since we have 2 to 3 days down and we're getting very close to a spot where I could see a relief bounce. Then I am actually very neutral coming into tonight and understand that if we open up down, we could find that buyers are going to step in. But will that continue to move up? Most likely not. But again, I'll go over the levels with you. Tuesday, August the 5th, we have U.S. trade deficit, PMI, ISM services, maybe a little bit more exciting, but again, not that exciting. It almost feels like continuation, right? Maybe down just a little bit, maybe a quick pop, then a sideways day on Tuesday. And then Wednesday, we have Fed Governor Lisa Cook and Boston Fed President Susan Collins on a panel. So basically, Fed heads talking. And then on Thursday, August the 7th, it gets a little bit more exciting with initial jobless claims, U.S. productivity, U.S. unit labor, cost, wholesale inventories, Atlanta Fed President Raphael Bostic speaking, and then consumer credit. And then on Friday, August 8th, nothing scheduled. Honestly, guys, this is a pretty boring week. I'm almost thinking I probably should have extended my trip just a little bit longer. I'm just kidding. Uh, a man can only eat so much mozzarella and tomatoes. I mean, seriously, at the end of the day, I was missing American food. I really was. I was missing our food here. But one thing I noticed very quickly is that um, there's a lot of preservatives and things like that in our food here. And I could tell my body did a lot better while I was in Italy. But again, guys, that's a different subject. We'll talk about it more in the room. Okay. Next thing that I want to talk about is going to be this week's earnings. We are packed with all sorts of earnings coming in, and it's very, very exciting. I like to use e-whispers on X, or formerly known as Twitter, and the reason why I use this is because it's really simple. You have this calendar right here. It gives me a Monday. It tells me before open, after close, Tuesday, Wednesday, Thursday, Friday, and as you guys can see, it's jam packed, man. It gets started with after the close tomorrow. Palantir. This thing has been on absolute fire. I like to trade earnings into earnings. I can also wait until after earnings. It just kind of depends. A lot of times when I trade into earnings, I'll do like some sort of credit, or sorry, some sort of debit spread. And sometimes I trade straight up. Like I traded straight up into, while I was in Italy, I traded straight up into Meta. And I did really, really well. I bought contracts at like 4 and sold them around 10. And that was really nice, right? So sometimes, things do happen on the right side going into earnings, but I actually just use the same things that I teach in the room, because these things are basically catalysts that push price to supply and demand, that push these things into trendy edges, my indicators that I use. And this is just an excuse for me to be able to take the trade. Whereas we are taught as retail traders to be scared of this type of stuff. Guys, I'm gonna let you in on a secret. None of you can 100% say what's going to happen in the market. And it doesn't matter if earnings is happening. It doesn't matter if Jerome's jumping on the mic. None of that stuff matters. What matters is price action, and also your process, your planning, and most of all, your allocation. Are you comfortable with the allocation? If you are, don't be scared to take the trade. Boom. Then we have HIMS, right? Everybody's talking about these two stocks right here. So this is going to be really interesting to see what happens. On Tuesday, we have Pfizer, we have AMD, we have CAT, SMCI. Moving on down here, Snap, uh, Lucid, Upstart, Rivian. On Wednesday, Uber, App, Shopify, IONQ, Oscar, Duolingo, Disney. I mean, super exciting. McDonald's, Thursday, Celsius, love this name. Lilly, love this name. So many great names coming out this week, guys. This earnings season is not over. It could be really, really exciting. So 2 days down, markets coming into a big week of earnings could be really, really fun. The question is, did you get trapped on Friday? Do you think it's actually really bearish, or was that an opportunity to buy? I think we'll know by the end of the week. I'm not going to be biased. I just am saying, hey, all this stuff looks very, very normal far as I'm concerned. Okay. All right. So the next thing that we want to be looking at is the bigger picture. I love to talk about the bigger picture. Matter of fact, they call me trendy for a reason, because I tend to find things that are not trending and then they turn into trending, if that makes sense. So, for example, years ago, I realized that a lot of traders like to focus on all the same time frames, daily, 4 hour, and sometimes they'll take it to a week. I actually like to look at the bigger picture, like the quarterly candles, the candles that represent 1 year, so a yearly candle. Those kind of things can really lead you and set you up for a successful year. That's if you got the patience. So when I look at these charts and I go over the bigger picture with you, what I need you to understand is that each one of these candles on this chart represent 1 quarter. Okay. That means just because something is happening in August doesn't mean it's going to look like that in October. Okay. So you need to have an open mind. Everything that I teach is fractal. So if I taught you something on say a 30-minute chart, you can use that same exact process on a quarterly chart. The difference is timing is the variable. One must wait until the quarter candle closes to know if that's going to hold. So let me just give you a quick example of this. If I teach you on a 30-minute to stay long above the 9 EMA cloud here, then what is the difference from using a quarterly chart? Nothing. It just means that we have to wait until the quarterly candle closes. And you'll notice that this entire process, and really since 2022, after price reclaimed in this area, and I know where I was over here, I believe in Orlando, teaching at the Money Show about my process. And things have looked very well since then. And you'll notice that once we closed above this 9 EMA, that, overall the SPY has been very, 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 and then it pulls back here, very bullish. And nothing has changed. Matter of fact, I'll continue saying this until one day we're underneath the cloud. But we are bullish far as the cloud is concerned on this quarterly candle as long as we can stay above that 9 EMA. So we're always taking note, like where is the 9 EMA at the moment? When we first started in 2025, I like to do a video to get you ready. And one thing that I noted was that price was far extended from the 9 EMA, and therefore I was really in a protective mode. I knew that, hey, the overall trend was bullish, but I also knew that, hey, we're probably going to get a pullback, this pullback right here. Okay. And I feel the same way now. Matter of fact, right before I left on my vacation, I noted that we're getting extended. And I don't look, I'm not a genius. It's not profound. I think a lot of people can look at this and think the same exact thing. Okay. But what's important is while you're on this journey to the upside, that you start noting that, hey, things are probably just a little overbought. It's starting to feel a little like, too bullish out there. Maybe you want to protect yourself. Guess what? This is the smallest I've been in my account for the entire year. So my positions, which I've updated in the room today, is at the lowest it's been the entire year. And this was done on purpose. So I am now setting myself up. I'm refreshed. I'm trying to get back in that zone for the rest of the year, right? And so we've done well. Things are going great. And now I just want to pump the brakes a little bit. And I'm noticing that we're getting a topping wick here. And again, guys, this is the beginning of the quarter. So it's not like, this thing, matter of fact, guys, this can look like this before the end of the year. Okay. It really could. And so you need to understand, again, we're just talking about a few days into this quarter, basically. All right. So what am I noticing? Again, we're extended. And when I say extended, I'm just looking at the price where we hit here. And I'm looking at that 9 EMA. And this extension looks like this, right? So we could see that there's a lot of room if price did pull back and say the next couple months. Everyone's always talking about August and September are bad months. And it feels like sometimes you want to be like, well, if everyone thinks that, why would it do that? And sometimes I'm shocked. It's like, well, everybody knew that and it was bad 2 months. It's kind of crazy, but sentiment, money kind of drive the market. And if everybody's scared and if they know that this is not a great time, a lot of times it will lean to that overall sentiment. And so it is justified in a sense until, prices can prove that they can get up and over certain levels. So for right now, the topping wick, the extension off of the 9 EMA tells me to just proceed with a little bit of caution. But since the overall trend is still really bullish, that there are areas where we can buy the dip. Okay. Now, far as this is concerned, my very quick notes. The size of this last quarter candle makes this a very tough Fibonacci strat, meaning I teach Fibonacci, right? That means I take my methodology, I take some fibs, I put them together, and then I tell you how to trade based off of this. Okay. But I have to follow my methodology. Okay. So I'm buying the dip, guys, long term until, things change. Like if we start to close, I say 560 here, but honestly, at the end of the day, these quarterly candles would have to close under 550. Now, does that mean that I'm hard headed and all I do is just buy long, buy long? Well, it kind of depends on who you are, right? In your time frame. If you're an intraday trader, you're just day trading, there's a lot of opportunities and a lot of using my PMZ indicator to get you in a short during the day is really straightforward. You can do that. But when I'm looking at the quarterly, I want to make sure that you understand that my big picture is I might have a little section over here that's like, hey, I'm taking 10% of my portfolio and I'm buying the dip, even when it's coming all the way down here, even when it's coming down here. And a lot of people will be like, what are you doing? Right? Why are you not getting short? That's because I have allocated in my account, let's say X, Y, and Z to buy the dip, and then I get to full allocation. Then I look for the market to go back up, and then I start trimming out of that position. And what happens is that, half of you are like, holy smokes, that was awesome. And then half of the people don't listen to the overall plan and they get wrecked in here. Okay, during these pullbacks. And the reason why I bring this up is because you got to understand, for me, it's a smaller allocation, it's a plan, and I stick to that plan. And then when things turn around for me, then I'm able to take the trade off for profits. Okay, that's the idea. Basically, you're just dollar cost averaging. Okay. Now, when it comes to trading, you may have another section over here. Let's just say it's blue, and you have X amount of money that you want to allocate towards day trading. That's where I'm using trendy edges. I'm using my PMZ, and I'm just focused on those strategies. Okay. So far as the quarterly is concerned, this is very bullish, folks, but it's saying a little bit of caution. So I want to use our lower time frames to kind of understand how to trade this and not to get overly biased that it has to move down into lower targets, but to keep an open mind that anything can happen. All right, guys. So again, 621, couple things that I did here just to point out. I took this low, I took this high, I placed some Fibonacci's on here. We had the bull channel that comes in around 601 to 578. We have the golden pocket that is aligned with the 9 EMA here around 560 to 540. Okay, these are all areas where I would want to try and buy the dip if we were to get a big pullback like that. Okay, the next chart comes, it makes more sense for a lot of other traders, all right, who may not, they may not have that bigger look. They're more interested in, like, I want to make money right now. I just want to know what I have to do today. And this is where the weekly chart might make a little bit more sense to you. So on the weekly, I came in, I think I got in, gosh, it's hard to remember, but it was like Thursday night. And then Friday morning, I was checking out the market and we were inside, meaning it was just an inside week. And then we just continued to sell off. And what we notice is that the 9 EMA is down here, and we could be trying to push down into that 9 EMA before we even see some sort of relief bounce. However, right here, we have an inside candle, and then we have this nice move to the upside. Prices simply come back to that inside and up is what we call it. And there is potential here, everyone, that we could see a relief bounce. So if we open up down and we are close to this 9 EMA, then I am looking for some sort of relief bounce on the open. And I say on the open, it could happen overnight. It could happen at 3 o'clock at night. All right. But what I'm saying is, again, my thought process is if we open up around these levels down here, I'm looking for a bounce. If for some reason we open up tonight, this is really simple. We just take some Fibonacci's, we go from the low to the high, and because it's coming off of a down week, we're looking for 624 and 627 to be resistance. So this in here would be an opportunity to try and fade the rally back to the downside and trying to get down towards that 614 to 610 level. Okay. So again, that is the weekly look. You guys can see really ugly candle. I mentioned something in the very beginning that we basically took 80% away from the last 5 weeks. 1, 2, 3, 4, 5 weeks. And what I mean is I just took some fibs and I am going to place my anchor there to the high. And you guys can see we pulled all the way back to almost 88.7% of those 5 weeks. So a lot of that time just taken back very quickly in 1 week. Okay. All right. So that is the weekly. My overall sentiment on SPY is actually neutral. I'm very open minded. It's more of an intraday strategy, if you will, looking for potential moves sideways to down. But we are coming off of 2 days. Okay. So remember, I said 2 to 3 days down, and then we usually see a bounce. One, and actually, if you look at this was a down day. This was a down day. Another down day. You got a lot of down days here. I'd be expecting a bounce here shortly, and of course, that bounce is what we would call a relief bounce until proven otherwise. Okay. All right. Next chart that I'm going to be looking at, and I won't put so much detail into each one of these. I just kind of, give you a lot of information. So we'll just kind of go with the quick. Since I went over what I'm looking for on these. But here is the Qs, and same thing, guys, very bullish, as we stay above the 9 EMA. Big topping wick here, and because we have the topping wick, we want to be cautious, but overall still looks really good. We have an area here of a possible relief bounce. We did close there on Friday, just like the SPY. You could see a relief bounce. Our bullish channel is 534 by 509, and our 9 EMA is aligned with what we call the golden pocket. So you align the 50 and the 618. So just know if you're looking for a bigger hedge and you believe that this rally is a short the rally until we get all the way down there, this is the area that I would really like to see on the SPY and the Qs, is that we actually come into the golden pocket or around that 9 EMA. And this is hard. I just have to say this for a moment. I'm reminded when I watch a lot of YouTube videos and stuff as I'm on vacation and I get back, a lot of traders were looking for a pullback. And they get the pullback and then it's like, hey, I got the pullback, right? I was right. But in actuality, if you're saying that for several weeks, you're wrong for several weeks. And there's a lot of money that could be lost when we get overly biased. It's like, well, I know the market's going to go down, but it took 4 weeks to get there. Now I finally, am right. It's not saying you're right or wrong. What I'm saying though, guys, is like I like to approach the market without being overly biased. I understand that there are levels down here. I understand that price can keep going up if it wants to. I understand that we do not have to come back and touch the 9. We do not have to come back to the golden pocket, but there are little hints on smaller time frames that can help us get there. So when I say I would like for it to come here, it doesn't mean it has to. So then we break down the smaller time frames, right? So it looks like something like this. Okay, well, here's the weekly. Well, what could stop this from ever getting all the way down here could be the 9 EMA. It could be this inside and up formation. So just like the SPY, we did close at a level that could possibly be a relief bounce. And a couple things that I'm going to show you a little bit later will actually help you understand why we could see a relief bounce. Okay. So here's the weekly. Here's the daily. Same thing, guys. You guys can see that we had several down days sort of neutral, then we broke down. So we are once again getting into an area of a little bit of support here that could see some sort of relief bounce. Okay. The next thing that I want to talk about is, just understanding relief bounces. Usually, what a relief bounce means is that when the market drops, and it starts to move back to the upside, it will usually, if you anchor some fibs from here to here, that high and low, it will usually only bounce to 23.6 to 38.2% before it decides to roll back over. And you get what's called an H formation. I like to call this the hope formation because everyone's hoping that the market goes back up, but indeed it continues to move back down. Guys, just understand 9 EMA is lined up a little bit lower. We also have a double inside and up formation that has not been tested since price moved out of here. Prices could be coming all the way back into the bull channel as well. So just note that. Okay. Next thing that I want to be going over with you guys is going to be the DXY or the dollar. And up here in Thinkorswim, we could just do $ DXY. I like to use this one right here, IFUS, and this is the blueprint that I've been showing you for several months now. Price did get that bounce that we were looking for as the dollar was bouncing. Market gets a little bit shaky. It's pulled back. But notice that on this bounce, we have pushed into the bear channel. And we did, this is what I'm talking about. If price stays below 99.5 and starts to roll over a little bit, we may get that relief bounce that I'm looking for. If the dollar bounces over 99.5, be careful. I do believe that we continue to move to the downside in the market. Okay. Just note that you are kind of stuck here. You have a bear channel here. You have the demand zone down here, and prices just kind of stuck between there. Therefore, I am neutral going into this week. Just a lot of things are lining up to tell me to be neutral and not overly biased to any direction. Okay. Next thing that I want to be looking at is the TNX or the 10-year Treasury. And what I'll be looking at is TradingView. If I can find it here, give me 1 second. And that is not it. Again, I hope you guys are doing really well. Like I said before, I really missed everybody. I really, really did. But I know that you guys were having a great time over here. And it looks like I missed out on a really nice rally. But at the same time, I was really happy to get away and just really not put a lot of concentration on the market at all. It was a good time. It was very eye-opening for me. And I learned a lot about myself, but also learned a lot about the market that I'll be sharing with you guys throughout the week. So be looking forward to that. Okay, so I'll give you some of my personal experiences. Anyways, this TNX, the 10-year Treasury. And technically, I see this moving towards 3.8 and below into later on in the year. I said June, July. We did get the pullback. I was off by just a little bit there. You guys can see, though, basically we're just between the two zones. Not really a big deal unless we get up and over the red zone or we get back down to this green zone. So for right now, it's the same thing I've been telling you week after week. It's trading between the zones. Moving on, the next thing that I think is really important is that we talk about the skew. The skew came in at 155. I thought it was interesting. Again, I wasn't trading last week, but looking at the skew, it closed up, which usually means that the market was moving up, but they are seeing, these are hedge funds, right? And the way that we use this is traders might use the skew index to adjust their portfolios. If the skew is high, you might consider buying some protective options, meaning puts, or reducing your exposure, which is what I've done. Conversely, a low skew might indicate, too much complacency in the market or lower perceived risk, prompting different strategies. Basically, this is really straightforward. We get up here, market's overextended, look to buy some protection. We get down here, typically what's happening is there's a little bit of fear in the market and we're looking to go long. Okay. And you can see this works really, really well. And I'll continue to use it in conjunction with everything. Now, I do not make a trade solely based off of the skew, so I like to incorporate this into my overall analysis. And this is telling me right now, if you look at it from an S-curve perspective, or just kind of like looking at this box and looking at this box, we're in the middle. Therefore, I am neutral. Man, Could you imagine? Here I am talking about neutral again. Just absolutely wild. All right. All right. So, next thing, this is going to blow your mind. So, after we do all that, guess what the fear and greed index is saying? We are literally right at the 50, mate, right in between here. I can't make this up. So, going into earnings, we are at a neutral at 50. We're at greed, we're at extremely greedy, and it went all the way back. And so, therefore, this really just lines up with Trendy's overall sentiment, and that is neutral, folks. Just be on your toes, man. You know what to do. We're going to come in here tomorrow. We're going to talk about the ES and the NASDAQ futures. We're going to talk about a couple charts. We're going to have lines. We're going to have price. We're going to understand our allocation, and we're going to execute, and it's going to be fun. All right. So, it's really that straightforward. That is your fear and greed index. And then the next thing that I want to be taking a look at here is going to be the ES futures, the NASDAQ futures, and then we'll finish this off with Bitcoin. Now, again, guys, this is a little bit longer than I typically like to speak, but I am coming back and just kind of getting back into the groove. You can see the ES futures closed down 111 points. We'll go from a weekly top down kind of look here. We pulled back. It looks a lot like the SPY. Very bearish candle, came all the way back. We closed underneath the support or the bullish channel. It was broken. The 9 EMA sits down here in the golden pocket. If for some reason we gap down into that golden pocket, most likely what I'll be doing tonight is going long in this area. I'm not saying I'm going long for days or weeks or anything like that. It could be like a 5-minute trade. It could be a 30-minute trade. Just kind of depends on what kind of reaction I get out of that golden pocket. If this golden pocket breaks down, then we have a higher potential, 85% probability if we break down below the 618, that we could see the 88.7, which comes in at around 6,000. So just please keep that in mind. And again, this is my bigger level, the 9 EMA and the golden pocket. Are definitely areas as a bull that I would like to see hold. Doesn't mean it's going to hold. Let's go ahead and move this on down into the daily. These are triggers. And again, triggers are just kind of placed at levels, Fibonacci levels, trendy edges, things like that. And I don't necessarily take a blind trade off of these levels. What I like to do is note that when price gets there, then I'm looking at a smaller time frame, looking at my signals, and if everything lines up, I'll take the trade. If you want, you can freeze this here and put these levels on your chart and see if or how they react. Just know that if we get the bounce, I do believe that resistance comes in around 63.5 or so. Okay. Let's go ahead and move down into the 4 hours, see if we notice anything. One thing that I will say with the trendy edges, that bulls, you need to get above the edges. Notice how we just wicked, I guess, below, kind of like a liquidity grab, if you will, and then we reclaimed the edges. This was an inside candle. So this is a positive. If for some reason we were to gap up tonight, we'd be working on a inside and up formation on the 4 hour that could lead price all the way back up towards that resistance level or this cloud that's right in here. Okay. Again, if we break down, I told you the levels that I'm looking at buying overnight, so please understand that as well. Your weekly edges, very important, guys. I'm bullish when we're above here, but if we're below, I'm bearish and I'm looking for more of a move to the downside. Your lower weekly edge comes in at around 62, 64. Okay, so below that, bearish. Above that, keep a neutral thought that we could continue to move up just a little bit. Okay, let's go ahead and in there with the overall sentiment of being neutral. And now let's go to the NASDAQ. And same thing, if we come over here, top down approach, weekly, pretty ugly, came back into a possible relief bounce. Just note, if we don't get the relief bounce there, we could see it down here at the 9 EMA. And if that breaks down, we could see prices move all the way back down towards 22,000 flat. Please keep that as a potential for a, if you're hedging or something like that. I would be looking for buyers in here. For some reason, guys, on the weekly, whether the ES, the NASDAQ, the Dow Jones, or anything like that, if price were to break below this cloud, then things look a lot different. Things start to get really ugly. It's like, look at this beautiful move that we had, and you can only imagine if things were to look like this and get underneath this cloud, then you're basically back to a halfway point. That means this whole entire rally has come back 50%, which would be just pretty ugly. All right. But it wouldn't surprise me. It'd be a lot like the beginning of the year, where things look doom and gloom, and then all of a sudden we get a really nice buy opportunity. Let's go ahead and go into the daily. Same thing. We have triggers here once again. Take note of the triggers. Once we get into these areas, I look at a smaller time frame, and if my signal set up, I go ahead and take the trade. Let's go ahead and move on. We're going to go into the 4 hour. Notice that price is pretty sharply sold off. There is an area down here that looks pretty nice if we were to get it into there. But again, like the weekly edges, we have a lower weekly edge here. We are underneath it. Unlike the ES futures, this was not an inside candle. This is a continuation candle to the downside. Bulls, you need to see above 22,905. And if we're above that, we could be looking for a relief bounce on tonight's open. If for some reason we gap down once again into this area, I'd probably be looking at buying the dip. Again, I don't know for how long. It just kind of depends on the reaction that I get off of that zone. Okay. Let's go ahead and end here with Bitcoin. I think that's really important. You guys all know that I trade Bitcoin. It's a long-term hold for me, so I just add into it. Looks like we had a topping process in here while I was gone. We did get up to 123,000. We also, take note that my overall 2025 projection was 138,000. We got pretty close so far, and we still have a long time left until the end of the year. Things still look really bullish here, but note that just like the ES and the NASDAQ, we're extended a little bit here and price could come down. As far as the weekly is concerned, it looks a lot like the other charts. We're getting very close to the 9 EMA. That is your next area of support. Bulls, if you can hold that, you could see prices move back down to 100,000. And if things get really ugly, you could see towards 85,000. That is all I have for this week. Sorry that it was a little bit longer. Guys, if you're brand new and you want to check us out, please come over to Simpler Trading. We have 30 days for $7. You can learn from Melissa and I, and we'll be making a challenge. So, putting together a challenge for the next 2 months. And I would really like for you guys to be a part of that and see how we navigate through what others would say is the hardest time in the market. I want to show you that it doesn't have to be hard. You just need to have a plan. Can't wait to trade with you guys tomorrow. Have an amazing day. Talk to you soon.